Hey internet friends, happening right now is what the mainstream media has dubbed the insurrection of the stock market. Peasants versus suits edition. If you don't understand what's happening in the stock market right now, don't worry, you're in good company. In this video, I aim to explain the entire GameStop scenario because this is one of those rare times in history when the underdog gets his moment. So let's begin, shall we? It began with a hedge fund who identified a dying company and decided to short their stock. In trading, the term short refers to when an investor borrows a stock from a broker and sells it immediately at its current price. This whole game involves investors targeting a losing business, with the expectation that the price of stock will go down. The goal is for the stock's price to fall so much that investors can buy back the stock at a lower price and return the shares they borrowed to their broker, but the profit is made by keeping the difference. Basically, if the stock goes down in price, investors make money. Like for example, if they initially sold the stock for $100 but buy it back for $90. But if it goes up, they lose money, like if they sold it for $100 but bought it back for $110. The more the price goes up, the more investors' profits go down, eventually resulting in debt. The idea is you're betting on a failing business. Failing businesses don't typically have stock prices that shoot up. Investors are gambling on an almost certainty that the shares will fall. Therefore, investors are able to pocket some shekels. That's how it's always worked until a bunch of people on the internet decided to play the game too, specifically targeting the stock of a beloved and nostalgic retail establishment, GameStop. A hedge fund had targeted GameStop as a failing business, but normal, regular people on this online forum on Reddit started to buy and hold a bunch of GameStop shares, which means the price shot up instead of falling down. The more people who heard of this, the more they joined in buying up GameStop shares, meaning that the hedge fund who had initially taken out a huge amount of short trades against GameStop, they began to bleed out, going belly up in debt to the tune of billions of dollars. Eventually, the hedge fund has to close their short positions and buy back all the GameStop stock at the high price, which means a payday for normal people who invested and a big chunk of debt for the suits. I mean, it's not an internet forum's fault that the hedge fund had shorted 140% of the stock, meaning they literally sold 40% more stock than actual stock available, otherwise known as naked short selling.
We are taking down Wall Street. We're going to take them down ourselves.
Now, the same Reddit forum responsible for the GameStop scenario have identified other hedge funds that they can short squeeze into bankruptcy, with stock in Nokia, AMC Theaters, Bed Bath & Beyond, to name a few. More and more retail investors are piling onto this movement, where ordinary people are playing the game and getting rich quick, using those earnings to get out of debt slavery while Wall Street is falling into bankruptcy. Last I heard, targeted hedge funds had lost over $70 billion. Every day that the hedge fund can't buy back their shares because of the price and the number of people who refuse to sell them, the more interest is accumulated on those borrowed shares. The price inflates to motivate sellers to sell, but they're not gonna. Ordinary people are holding and not selling, so these hedge funds go broke. The idea is that the hedge fund and the brokers go bankrupt and the banks begin to inherit all the debt. Money printer goes burr, end of story. This whole scenario, the game, our monetary system, I truly think this GameStop story highlights how absurd and corrupt our whole monetary system is. The media, predictably, has been on the side of the bankers and billionaires in the coverage of this story. Along with the blue check marks on Twitter, as soon as the media caught wind of what was happening, they did what they always do. Called the offending party Nazis, claimed that the greedy commoners shouldn't be able to manipulate the market in the same way the suits can. And it's like the social medias work together to shut these people down. Discord banned Wall Street Bet's server for hateful and discriminatory content. The Wall Street Bet subreddit shut down for a while, all because the wrong people manipulated the stock market. On Thursday morning, as more regular, average Joe folks were preparing to get in on the short squeeze and buy some stock, major trading apps like Robinhood decided to restrict trading, limiting the buying of popular stocks like GameStop, Nokia, and AMC, essentially shutting down regular people's ability to buy a few stocks and protecting these hedge fund suit types from going belly up. On Thursday afternoon, Robinhood announced it would allow limited trading Friday morning, but warned they could change their mind at any moment. So much for a free market. Word on the street is class action lawsuits have already been filed. We'll just have to see how the rest of the week goes. In summary, the Federal Reserve has been manipulating markets and stealing from the middle class since 1913. Our entire financial system is rooted in Babylon debt slavery. Wall Street was completely responsible for the 2008 housing crisis that crippled millions of families. They profited off our pain without punishment. But the second that normal people profit off the same system, with the roles reversed, they shut it all down within 48 hours. Regardless, I'm so happy to see a few of us peasants stand up to Wall Street. The entire system is exposing itself. So good for you. The world is watching. What do you think, internet friends? Do you think this whole scenario will contribute to the financial aspect of the Great Reset? If you hear my baby in the background, sorry about it. I don't have a babysitter, but thank you so much for watching, subscribing, and supporting my channel on Patreon. Bye!